The week began with a big announcement from the Federal Reserve. Could the Bank of England follow suit? And what else can we expect to see across the markets? We'll discuss this and more with Bob Mason from FX Empire. This is the Midweek Market Drivers. Well, Bob, thank you for joining us. As always a pleasure to speak with you. Let's jump straight in, shall we? Already on the first day of this week, we saw a large announcement from the Federal Reserve. Could you go into the details of this and let us know what happened?
Yeah, so it's called the Secondary Market Credit Corporate Facility, and it's $250 billion US dollars. So that's quite a chunk of change that the Fed's throwing into corporate America. Maturities need to be 5 years or less, and each corporate bond needed to have been rated at least investment grade as at the 22nd of March. So that actually means that, the Fed could be buying junk bonds. If there's any downgrades because of the pandemic, and obviously a rating agency thinking that corporate was not going to be paying any of its debt back, then that would be a junk bond, and the Fed would be willing to salvage that business, that company. That really means that obviously they're preventing even more job losses and preventing default, which would have a far greater impact on the US economy. So, that's quite a step by the Fed, and we obviously saw Powell getting grilled at the first day of testimony to Congress on Tuesday over, the decision to jump into the corporate bond market. So for the equity markets, wow, it's a free run almost. Well, that's what people think. I don't think it's as clear-cut as that. The Fed's not just going to be, jumping in willy-nilly. So something to look out for. Yeah, it's worth mentioning as well, while obviously corporate America and the US equity markets were driven by the corporate bond component of the Fed support, they're also doing a Main Street lending program that will basically support small to medium-sized businesses as well. So it's not just the megas that are going to be supported here. They're even looking to help out the smaller shops. So that's pretty big stuff for the US economy. What does that mean? Also, that means that obviously the Fed is expecting quite a drawn-out economic recovery, and Powell keeps insisting on that and highlighting that in each of his speeches. So the markets do need to be aware of that optimism of a V-shaped recovery. Well, the Fed just doesn't see that.
Yeah, so it's clear that things are just starting to unfold and we should get a lot more information later in the week. Meanwhile, Bob, what about the reason for other monetary stimulus? COVID-19 still a big factor?
Yeah, I think COVID-19 has been, obviously the biggest disaster to the economy. For many economies on record, obviously you had the Great Depression and so forth. So yeah, COVID-19. You had obviously the trade war between the US and China that weighed on growth going into the first quarter of this year. And then for Britain, you've got Brexit as well and that uncertainty. So, there was a shift towards monetary policy support that was likely to kick in anyway, but not to the levels that we're seeing right now. So yeah, COVID-19, not much else to really think about right now. But for the BOE on Thursday, well, there's going to be more to think about than just COVID-19.
Elsewhere, Bob, are there any other notable fundamental events going on that we should keep our eye on?
Yeah, in terms of, catalysts for the global financial markets, that's what we're getting. And that's driving the equity markets northwards, and the likes of the Aussie dollar, loonie and Kiwi. Once these catalysts slow down, you're going to expect the markets to be searching for a reason for another upward leg. And that's going to be hard to find when you consider what's on the cards and on the horizon from a corporate earnings perspective and what economic data we're going to be seeing in the coming months. Yeah, we saw US retail sales numbers. They were pretty impressive for me. That was quite a sharp bounce back. But is that sustainable? No, of course not. Unemployment levels at the level they are, that's going to weigh on spending and ultimately service sector activity in the US economy. So there's plenty of reasons why we could see a pullback. You've got, obviously Russia and the US, China and the US, you've got Iran. There's plenty of other things that could, curveballs that could really hit the market at any real time. And then you got the presidential elections. We're in midway through June, so come July, August, that's going to start heating up as well. So plenty to look out for.
All right, and finally, Bob, the Bank of England could maybe follow the Federal Reserve. Is there anything else you would like to add regarding that?
Yeah, didn't Mark Carney get out at the right time? You got Bailey at the helm now as BOE governor. and he's got his hands full. You know, the GDP numbers out of the UK, well, that was pretty depressing stuff. And when you consider, you know, the ongoing lockdown measures, they have eased, but you know, it's not all guns blazing, as it were. You know, the UK economy is still struggling, so that's quite a bad second quarter. So what's BOE's in action on Thursday? You know, so you know they're definitely going to have to do something. Negative rates, well, there's been chatter. They may even promise negative rates. That would be quite impressive. That should sink the pound, that's been relatively resilient of late, largely because of, you know, Brexit, and hopes that, you know, the both sides, EU and Boris Johnson's team, can finally muster up some common ground to deliver an agreement. They have agreed not to extend the transition period. So, you know, pressure's on. So we're expecting plenty, you know, of chatter on that. So yeah, BOE, COVID-19, economic recovery, Brexit, these are the three things. Throwing in the kitchen sink now may be a bit dangerous, but, you know, the promise of negative rates could come into play, in addition of some additional monetary policy support, you know, this week.
Bob, thank you very much. It's always a pleasure to speak to you. Take care of yourself, and we'll see you again very soon. Thank you everyone for watching. Don't forget to follow Dukascopy TV across all of our social media platforms, and we'll see you all again very soon as well. Goodbye for now.